Hello, everybody, and welcome back to another episode of the Rogue Agent Answers. My name is the Rogue Agent. Some people call me David Lewis, and every week I answer one of the many life insurance related questions that I've received from clients, from email subscribers on the daily email list, questions floated to me from across the interwebs, in the comments sections, which I know you're not supposed to read, or just interactions that I've had with people in real life over the past 20 years, which is a long time. And some of these questions I just scribble down on scrap pieces of paper. Some of these are stuff I've written down on my phone. Some of it is on Post-it notes scattered all over the office. And every week I answer one of those questions. So if you'd like to ask your question, drop them in the comments section or join my email list for more life insurance tips and advice at monogenics.com. monegenics.com. Also keep in mind that nothing in this podcast is or should be construed as financial, investment, legal, or tax advice. In fact, nothing that I say in this podcast should be construed even as insurance advice, as I don't give individual advice blanket just across the internet unqualified to random strangers. So if you need any of that stuff, contact a licensed professional that you know, like, and trust, preferably someone licensed in your jurisdiction. And now for this week's question. When should I convert my term policy to whole life? But realistically, you should convert it when you feel comfortable doing so. I don't know when you can afford it. Don't wait longer than necessary, but also don't rush it. So the idea of term conversion is that you convert your temporary term life policy into a permanent policy, either universal life or whole life insurance. But when you do it, you basically what you try to do is you do it when you can comfortably afford to do it, right? Financially, I'm speaking, not emotionally or psychologically. Like a lot of people just like, oh, I don't feel ready. But you have to be objective about it, okay? And you have to look at your finances honestly and objectively. And frankly, that is difficult for a lot of people to do. A lot of people don't do that. In a certain sense, I guess that's job security for me and others. But yeah, you basically do it when you can financially afford to do it. Realizing at some point your term policy is going to run out and you'll have to make a decision one way or another, or face a policy lapse or radically increase premiums, because at the end of those level term premiums, a lot of companies auto renew to an annually renewable policy. And the premiums are going to jump really high. So when you convert a term policy, the new permanent policy is going to be priced according to whatever age you happen to be at conversion. There is an exception to that. New York Life does offer, at least at the time of this recording, I should say, they offer an original age conversion, but it's expensive because you have to pay all back premiums. So you could conceivably buy a term policy when you're 30 years old, wait till you're 40, convert it, and then pay premiums on your whole life as though you were 30 years old. But you have to pay, if you wait from 30 to 40, you have to pay 10 years worth of back premiums. And if you have a lump sum of money, that would be great. And it's a great use of that. And man, you're going to get a fantastic deal. But if it's just your garden variety conversion, then yeah, you're going to be converting at your current age. So if you do an attained age, it's called attained age conversion, you'll retain whatever risk rating you had with your term policy. Even if you ordinarily wouldn't qualify for that rating now. So if, let's say when you bought your policy, you were young, you were in good health, and now you have some kind of chronic health issue, and you normally, maybe you wouldn't even qualify for insurance normally. It doesn't matter. If you have the term conversion guaranteed provision, conversion privilege, then you can convert it regardless of whether or not you would actually qualify, because the term conversion privilege in all of these policies says that you can convert whatever. It's your right, your contractual right to convert. So if you have the best risk rating from the insurance company, you're going to keep that rating when you convert. But the new policy is going to be priced at whatever age you are. Again, we're assuming attained age, which most term conversions are. Like I said, there's that one exception, but most policies are attained age conversions. So if you bought a policy at age 30, a term policy, and you got excellent pricing, you convert the term to a whole life at age 50, your whole life is going to be priced based on your attained age of 50, which is going to be a higher mortality cost. But the benefit to the conversion is that you never lose your insurability, right? It's a hedge against uninsurability. So if you develop that, like diabetes, or I don't know, you just get old and you get fat. I know that's politically incorrect, but you get old, you get fat, you get health problems, whatever. If you have something that would disqualify you, it doesn't matter. Your term conversion gives you the ability to do that. Convert to whole life or UL and not have to go through underwriting. So, and you won't be rated either. So, and the insurance company can't turn you down for coverage. They have to convert. So that's just no ifs, ands, or buts about that. I also have a related question here, so I thought I might, answer this one as well while I'm on it. So the other question is, how long do I have to wait before converting for whole life? Well, that depends on the conversion privileges in your term policy. So some policies have restrictions on conversions. Other policies have no restrictions during the level premium period of the policy. So if you own, as an example, Mass Mutual, you might have some restrictions on conversion. It depends on which convertible policy that you bought. They have, at the time of this recording, they have two different types of conversion policy. So and carriers are always changing things. So it's not like this will always be the case, but you just have to check, before you buy your term policy, what your conversion privileges are. If you have a Penn Mutual policy, you can convert it at any time within the first. The cap, I think, is 20 years. So if you buy a 20-year policy from Penn Mutual, you can convert it within 20 years. If you buy a 30-year policy, a 30-year term, you can only convert it. The guaranteed conversion privilege lasts only for the first 20 years, or up to, it says under age 70. So up to age 69. So then they're not going to, make you go through underwriting. If after that, all bets are off. So, and then you've got other care like Guardian, you can pay extra and have the conversion whenever you want. So when you convert, some insurers will give you premium credits towards a permanent policy, others don't. If you have questions about your specific term policy, please contact me and we can discuss what your policy or contract allows, or contact whatever agent you feel comfortable with. But anyway, that's how term conversions work. I hope that answers the question, and I will see you in the next one.
Okay, that's it for this week's question. If you'd like to add your question to the list, just drop them in the comment section or send me an email. And if you want more life insurance tips and advice, just head on over to monogenics.com, monegeniX.com, and sign up for my daily email list.